We're back. I'm back in Philly, and we are back with a new market wrap. We will be restarting my favorite show, now in a bi-weekly format. I think they think I'm just too old to do a weekly one, but hey, it's a start. Now, for those of you who forgot who I am, I'm Mike Manjos here, Chief of Sales for WatchBox. We will be spending our time here chatting about observations in the market. It's what we do internally here at WatchBox every day. And hopefully it will give you some insight into where we see the market going, and we'll have some fun at the same time. So let's jump in. Earlier in June, we had the last of the spring auction season. Now, I was heading into the week with a little case of auction burnout. This spring season always starts in Geneva in early May, and as we discussed in my last recap, it was a big season with a ton of watches and some very successful results. Now, 2 weeks later, the auctions moved to Hong Kong. A little less energy for sure, but overall decent results. And then early June, we arrive in New York City. Now, it all started on Tuesday, June 6th, a Christie's sale. By all accounts, it was a dismal sale. It was only 86 lots, 22 of them bought in. Now, this is bad. A few of the pieces that did sell went extraordinarily low. The 5711 1A for $88,000 all in. A 5990 1A, $100,000 all in. A 5711 1A green, $252,000 all in. And the last lot in the sale, a 5270P with a salmon, sold for $138,600. Now this is a very low result. Now the next auction up in the week was Sotheby's on Friday. And after the Christie's results, my expectations were low, but the results were shocking. Now the auction was headlined by some watches from Paul Newman and Joanna Woodworth. Both Daytonas brought over $1 million, and the remaining pieces in the auction were surprisingly strong. Now the week wrapped up with a 2-day Phillips event, and by all accounts, it was just okay. Day one was decent, finishing with the same 5270P salmon, bringing $177,800, almost $40K more than the Christie's result. Day two was surprisingly weak. Now, granted, it was a Sunday, but especially for a Phillips sale, which is typically the market leader, we saw two rainbows sell just over $300,000, and outside of some nice Jorns and a few vintage Pateks, results were just okay. First, in my opinion, there were just too many auctions in a 5-week period. So inevitably, some of the items will fall through the cracks. While this is fun and creates excitement for followers and guys like us, it doesn't give you a true representation of the market. 2, modern hype watches are down, but still trading. Now, while we might think a 5711 1A at $88,000 is a bargain, we need to keep perspective that just 8 to 10 years ago, that watch was sitting in a case for less than $20,000. 3, now FP Journe, after the Geneva auction, seems to have regained strength. Strong results across the board, and it seems to now be the benchmark for independence. We also saw other micro brands, Romain Gaultier, MB&F, remain near the top of the market. 4, AP is still struggling to find their level, and many pieces failed to sell at the old prices. So I believe the market has a way to go, especially in the high end. And last, Greubel Forsey also seems to be struggling to find their collector base. Almost all the Greubels in the auction sold at very low numbers, especially when looked at against retail. And 5, Patek Vintage and Neo Vintage seem to be gaining traction again. Now, many people over the past year or two only judged Pateks based on sports hype models, but I'm seeing strength in the classics, and it's wonderful to see. Now, the good news is auction season is now done. The market absorbed a record number of pieces, and the pricing overall seems pretty stable. Now, the summer is typically a lighter trading time. We all focus on vacations and the family, and I expect we'll see a relatively stable market over the next few months, barring any major geopolitical issues. I believe we could see a bounce back in the fourth quarter as collectors traditionally re-engage in the market. Now, the second subject we're going to talk about is new goods. And one of the most interesting parts of the market over the past few years has been new goods. Now, COVID has changed the market, and especially how the brands operate in the market. For most of my 40 years doing this, the brands would launch novelties in Basel or SIHH, now Watches and Wonders, and then spend the next year delivering the new goods. And since it took so long to deliver, oftentimes the market forgot about all the new introductions. Now fast forward to 2023, and now brands are doing new releases, drops, we'll call them, throughout the year. Tudor is about to release a new model this week, and it'll be delivered to the stores this week. Rolex broke the internet last week by dropping a new white gold limited edition Daytona. By spreading out releases all year and cutting down the lead times, the brands have been able to hold the spotlight, and when they do release, have kept clients engaged throughout the year. Now, often I hear from clients that the over-retail game will end soon and bundling will end, and you will be able to walk in and buy your favorite watch. I believe this is wishful thinking, and certainly in the short term, I don't believe the current shortage situation will change. Some people believe that the shortage was created by the brands, but it's simply not true. Both Patek and Rolex are delivering more product than they have ever delivered. Stores are selling more new goods than they have ever sold. It's strictly an expansion of demand. Social media, new releases, potential price appreciation, flipping have all contributed to the outsized demand. Now, while the world is getting back to traveling and shopping, I just don't believe we're going to get back to a situation where watches are sitting on the shelf anytime soon.